So let's just start broadly with your kind of high level view here. What do you think is really going on? Tom, let's start with you first.
Well, Leslie, I think the markets are a bit nervous in crypto land, in equity world, because one, we've had a government shutdown, and then there's been doubts about AI valuations and people raising questions about that. So AI stocks have corrected and many growth stocks have corrected. And then in crypto specifically, it's been dealing with two issues. One is there was this big liquidation event on October 10th, one that really was a larger liquidation event than anything seen in history.
Tom Lee and Matt Hougan analyzing the market. What looked like random chaos turns into a pattern once Tom Lee's analysis settles in. The government shutdown, the stretch valuations in AI giants, and the sudden pressure on growth stocks all merge into a single narrative of fear. But the real shockwave came from the October 10th crypto liquidation, a record-breaking flush that forced even strong hands to step aside. Matt Hougan sharpens the picture by calling Bitcoin the canary in the coal mine, the first asset to send out a warning signal before the broader market reacted. This isn't just volatility, it's exhaustion. Liquidity has thinned, leverage has reset, and the forced selling resembles the final stage before a turnaround. Beneath the surface, the groundwork for a recovery is forming even before the sentiment catches up. Let's get more of the insights.
And the second is because crypto is risk on, I think markets are really struggling with what the Fed's going to signal on December, because, if you end up with a hawkish Fed, it gets crypto investors very nervous. I think that's all creating this downside pressure, but I think the good news is there are signs of exhaustion. I did speak with Tom DeMark of DeMark Analytics, and he thinks there are signs that would look like a bottom that could be occurring sometime this week.
Matt, do you agree with Tom here?
I actually do exactly agree with Tom. I think we're nearing a bottom. I look at this as a great buying opportunity for long-term investors. Bitcoin was the first thing to turn over before this broader market pullback. It was sort of the canary in the coal mine, signaling that there was some risk in all sorts of risk on assets. I think it'll be the first thing to bottom, and I agree with Tom. We're getting very close to that point. So I think it's an exciting opportunity, again, for people who are looking out a year or more into the future.
When the discussion shifts to Bitcoin's price action, a clearer narrative emerges, not a collapse, but of quiet rebuilding. Matt Hougan's conviction brings a new tone. The worst may already be behind the market. Bitcoin fell first, suffered the hardest, and now stands in the early stages of stabilization. The deeper signals support this. Miners, once strained, are showing signs of recovery. Long-term holders remain unmoved, anchoring the supply. Exchange balances continue to drain, hinting at accumulation by players who think beyond the next headline. These are the same footprints that appeared before previous multi-quarter rallies. With the halving tightening supply and ETFs steadily absorbing spot Bitcoin, the market begins leaning toward an asymmetric setup, limited downside, expanding upside. Fear dominates the surface, but underneath, confidence is quietly returning. In moments like this, Bitcoin often begins turning long before the world notices. Let's get more of the insights.
Tom, kind of digging into Ethereum a bit more, what do you think are some of the idiosyncratic drivers here? Are there things that you think may be due for more of a decoupling from just the broader risk environment, or crypto as well?
Well, Ethereum is a smart contract platform, so it differs from Bitcoin, which is a store of value, and in many ways its virtue is that it's inert, and it represents digital gold and a good store of value. Ethereum, on the other hand, is, because it's a smart contract platform, is really the rails where I think a lot of things are going to be built. And one of the big breakouts this year has been stable coins, but it's also been things like prediction markets, and now talk about tokenizing more than just dollars, but equities and real estate and alternative assets and other assets. And a lot of that will be built on Ethereum or layer 2. So I think from a perspective of what the ecosystem looks like, Ethereum is a place where there's a lot of activity taking place. and you can measure it by transaction volumes.
The conversation enters a new phase as Tom Lee shifts from Bitcoin's resilience to Ethereum's expanding universe. His framing draws a line between the two assets, Bitcoin as digital gold, Ethereum as the foundational layer powering a new financial architecture. While the macro noise feels overwhelming, inflation fears, recession chatter, geopolitical stress, Ethereum's growth engine continues forward untouched. Stablecoin adoption accelerates across continents. Tokenization pilots by BlackRock, Visa, and major global institutions increasingly choose Ethereum or Layer 2 networks as their settlement rails. The on-chain activity tells its own story, rising transaction volumes, expanding developer ecosystems, and real-world use cases maturing beyond speculation. Matt Hougan calls it a generational opportunity, and the data supports the claim. These are secular trends, not cyclical ones. Even when markets shake, the infrastructure being built on Ethereum keeps advancing, laying the groundwork for a multi-year supercycle. Let's get more of the insights.
Or transactions per second, or even value locked on the chain, and these are all rising. So to us, I think it's a story that still is in the earliest stages, and one of the reasons we consider it a supercycle.
And Matt, you agreed. You said that you agree with Tom that it's nearing a bottom. How much of a long-term buy do you think this is?
I think it's a generational opportunity for long-term investors, whether you're looking at Bitcoin, Ethereum, or Solana. To double down on what Tom said about Ethereum specifically, look, I think investors are very nervous broadly about the economy, about AI valuations, about tariffs, about the broad economy. You want to look for secular trends that are decoupled from that. I think regardless of what happens on the economy in the next year, stablecoins will grow tremendously. I think regardless of what happens, tokenization will, maybe 10x in the next few years. Prediction markets are going to be huge. Decentralized identity and digital identity are going to be huge. Ethereum lets you play those secular trends, which are in this enormous growth phase, almost regardless of what's happening in the broader economy. So for me, it's really it's a generational opportunity, and to get in at these prices, I think really is almost a gift for long-term investors. It's a tremendous opportunity.
Tom, in terms of just the overall volatility, what are some of the near-term headwinds you're expecting Ethereum to face?
Well, one of them is the industry did suffer a big liquidation event that I think crippled many players and wiped out many accounts. So I think that this, just like in 2022 or in 2020, it does take a few weeks for the industry to sort of find its footing, and I think that's why crypto prices have lagged here. And it does have the signs of that maybe a market maker or two actually is unable to provide market liquidity. And as you know, as liquidity contracts, it's the same thing as the central bank tightening. So it's almost like crypto QT. I think the other thing the markets are grappling with is people talking about the 4-year cycle. Many are convinced that Bitcoin prices have peaked. So in some ways, Bitcoin being the blue chip and the bellwether is important for crypto, because if Bitcoin makes a new high this year, then it really obviates the fact that there is a 4-year cycle. And so it's, to me, between now and year end, I'm pretty bullish on stocks. This sort of weakness in the first half of November was what we expected. But as markets rally, I think that's going to help propel Bitcoin to an all-time high.
Tom, we can't let you go without asking about Granny Shots. That ETF recently celebrating its 1-year anniversary, gathering $3.6 billion in assets in its first year. You plan to expand the lineup. How do you plan to do so, and where else on the court will you be shooting from, so to speak?
Yeah, well, that's right. Granny Shots, which refers to a way of shooting free throws, proved to be very popular with investors, as you point out. And part of it is the performance. Granny Shots, in its first year, outperformed the broader index by 1,000 basis points, and year to date, beating the S&P by more than 1,000 basis points. The idea of Granny Shots is the idea that there are super cycles, themes that last for more than 5 to 10 years, and we want to buy the strongest stocks. So we are expanding the Granny Shots family. That they're going to go effective tomorrow. One is a mid-cap Granny. So this is taking the same Granny model, finding the 7 super cycle themes, but buying small and mid cap stocks. And it's going to hold more names, maybe 40 to 50 names versus 30 for Granny. And this is going to be a good way for investors to get additional Granny exposure in small and mid. And the second is an income-oriented Granny Shots product. So this is going to be using the same Granny Shots model, but also generating income. So the tickers are GRNJ for small and mid cap and GRNI for the Granny income.